So, hello, welcome on my channel. I would like to share with you some ideas what I have, my trading style, some mindset and these things, how I personally trade, my strategies, and I would like to share it with you through my videos. So, as an introduction to my strategy, you can see that I'm on TradingView. I'm on a 15-minute time frame. I use a strategy combined with smart money concepts and footprint chart. I will show you everything later. So I don't really need to look at one on a daily time frame. It's good, but in my strategy I don't personally look at the daily time frame. I have a strategy, it's scalping and you can also say day trading, because I'm really my trades usually take about 1 hour approximately. Sometimes it's 6, sometimes it's 5 minutes, sometimes it's 15 minutes, it really depends. So what I'm looking, maximum 1 hour. We can analyze it on we are British pound, Australian dollar. We can see clearly that it's bearish. I go on 15-minute time frame, I analyze it on 15-minute time frame, and I have entry points on 1-minute time frame. So we are bearish. We can see that we are bearish. Okay, so we are looking for sells. So I put there text and we are looking for sells. So I draw supply zone. There is a supply zone. I drag it. I place an alert at the 50% of the supply zone. I just mark it. Okay. I pull the GAN box. I draw it like this, and at the 50% of the supply zone I set an alert and it taps in. I am going on 1-minute time frame. Also, so I pull my GAN box. When it taps in our 50%, I also want to target. I usually target at the 15-minute supply zone. Oh, sorry, demand zone. It depends. Sorry, at the opposite. So I can see a demand zone right here. Why right here? Because we are looking on demand zone. So last bearish candle. In some cases it depends. It really depends how I draw it. But let's say I will draw it like this. I drag it. I will just that there is a demand zone. We can see there is no imbalance right here in the candles between these two candles. But never mind. There is this imbalance and it wants to be taken out. It's bearish, so we are looking for sells. There is imbalance, there is demand zone, because also we can see this, that there is a small change of character and it will go here and here. It will test and maybe it will go up and make a break of structure, or it will break down. So I will just yes. So we are going on a 1-minute time frame. It's in the 50%. Now we have a bullish candle. Look at the time, 14:59. Now we are going on the footprint chart. only I will say I have through any disk because I have a footprint chart on the second computer that I have, so I hope it won't be disturbing. So we ended at this candle, this green bullish candle. There is on TradingView it's -1 minute, so you can see at the time it's 3 o'clock. So if you see it for the first time, it could be confusing. There are a lot of numbers, a lot of information. It's okay. I will tell you what to look for, what I'm looking for. Only just what I will say. You can see these numbers. These numbers we read diagonally. So 13 to 0 or 0 to 13, 10 to 7, 25 to 3, and like this, like this, like this, in this way or that way. So you can, secondly, you can see these red and blue numbers. On the left side of the candle, here it's bid, here it's ask. There are sellers, there are buyers. Aggressive buyers, aggressive sellers. It will be less complicated like this. So why there are blue and red numbers? It's called imbalances. Why? Because when you read it diagonal, this 15 is way bigger than 0, and these numbers are printed blue or red when it's 4 times. I have it in the software, in the Orderflow, that it's 4 times bigger than the opposite number. So 15 is 4 times or more bigger than 0? Yes, it is. Is 16 4 times and more bigger than 0? Yes, it is. You have 33 against 6. Is 33 bigger 4 times than 6? At least. Yes, it is. 35. Is it bigger 4 times at least than 3? Yes, it is. So it's printed like this. You have 22 to 11. 22 is not 4 times bigger than 11. It's only 2 times. So like this. The confirmation signals, what I personally use, is these imbalances. It's one confirmation. So we have a red candle. You want to see at the supply zone, red candle with big volume, big these imbalances, big numbers. Also, what is also nice to see, delta. You have delta, max and min delta. This is the final delta because the candle, this candle opens here, closes here. So it starts here. It does this and this and this and close here. When it starts, the max delta was positive 29, so you could see that this went green, bullish, and it ended up minus 76. But you have min delta too. It opened, it did something like this, and then this is the maximum, this is the minus 91, and it closed to minus 76. What is a delta? Delta is buyers versus sellers. The strength of buyers versus sellers is just the coefficient or some it's a number between the power between the sellers and buyers. Just look at this. It's only like a number with a color, and that there is a strength. So the next confirmation, the third, what I use, I want to see this yellow printed box or rectangle at this number. It's called exhaustion print. It is that no one wants to buy anymore because it's on the buy side, on the ask. so no buyers want to buy anymore. It's printed automatically by the system. So you will see it, but we want to see the delta. I will show you the entry point. This big this big red candle, we have multiple imbalances, 1, 2, 3, 4, 5 imbalances. That's a lot. So this is one confirmation, very nice. There we have delta minus 123 is the final delta, and there is minus 125. It's almost 100%. It's very good. And you can see minus 30, minus 17, 51, 35, minus 76, and these things. Here you have minus 120. It's a big sign. Here, here minus 123. Also big sign. Be aware. Just look at it. Next candle printed these exhaustion prints. No one wants to buy anymore. Buyers don't have the strength. Also, we can see that there were stop losses above here, and this is what liquidity grab, or it could be a liquidity, but mostly it's a liquidity grab. So you have stop losses above here. So you push it up, and big ass red candle down. So no one wants to buy anymore. 100% negative delta. 1, 2, 3, 4, 5 imbalances. So for me this is a nice signal to enter short. We are in the supply zone. We are above the 50% in the supply zone. So these are the confirmation. Also there is a red. It's a bonus. We have a red candle, and in the red candle, when you have these blue buying imbalances, it means these are trap traders, because they wanted to buy here, but they really they will know really fast that it's going to sell, so they get out of the position, and they will short it. But you don't really know. This is a bonus, 0 prints. I personally really don't use it. It's only just another extra confirmation that it could go even lower. But this is the main thing. So we know this candle. Look at the time, 15:14 on TradingView, minus 1 minute. 1 minute, sorry. So we are looking for 15:13. This is our candle. This candle is this candle. So what I do is I pull the GAN box I drag it like this, and I enter at the 50%. So short position, entry here at the 50, and stop loss. You can put it above the supply zone, above this high, above this zone. Sometimes it's it depends on the currencies, but sometimes it could be 2 pip stop loss. I know that sometimes I had 0.8 stop loss, but now on the British pound, Australian dollar, I would put 5 pip stop loss. So where to put target, we have a target, so here at the next at the demand zone also we can drag another gun box, put it like here and drag it into 50%. So we have this. Okay, so now I will play it slowly that you can see the entry. So these candles, we are in a trade. You can see that it tapped into our entry point, and now I can play it. Okay, and it smashed our take profit. You have beautiful 16.82 risk to reward ratio. The risk to reward ratio is individual. I use it because I aim usually at the next demand zone. Sometimes I get stopped out. It's really normal. It's the part of the game. I can't do anything without it. I have to accept the loss. It's okay. If you don't want to hold it like this, it's like this is 1 hour and 30 minutes. It's not a swing trade for 4 days. But if you want to aim something fixed, I would aim at 1 minute lows. So for example here you can aim and it's almost 7%. It's also nice for an FTMO challenge or something like this. You use 1% or 1.5% or 2% if you are aggressive, or if you, it depends on your money management, risk management. So you pass FTMO challenge in 1-2 trades, but it's something else now. So yes, when I trade, I aim at least for 5 risk to reward ratio. So you can see is here at this low we can sorry, at this low we can push it like here, and the minimum I would go for it's 5.6. Then I wouldn't close it. I would just put the stop loss above this, because you have here you have a break of structure, here you have another break of structure, and above all these highs I would place the stop loss. So above here I would place it, above here, and if it goes against me, never mind. If it turns against me like this or here, I have 9%. It's almost 10, so I wouldn't be mad. So this was a nice trade. I also yes, that here I would consider there is chalk, change of character. So yes, just to show you also break of structure. So that's all. Thank you for watching this video. I will upload other videos, so see you at next video, next setup, next trade. So thank you and bye bye.